Hey everyone, it's the patient hodler coming at you with another video, and in this one we are going to talk about the Lehman effect within the crypto market, about the next entities that are collapsing right now in the crypto market, about the effects and potential effects for our investments, and the little things that we can do right now and that we should think of right now when we are acting in this market. But before we start, please keep in mind that I'm a crypto and NFT investor and not your financial advisor. So please do your own research before you ape into Bitcoin or the altcoins or whatever other project that we are talking about in this video. Also, if you enjoy this type of video and content, please consider dropping a like, subscribe to my channel, and let me know what you think about the current situation and the newest collapsing entities in the comments below. Tap the bell to always get notified whenever I upload a video. And with that out of the way, let's get started. So I am in the fields again, and that is exactly why you should only take me as a guy that is in the fields talking about crypto, that has a little investment in crypto and some experience in the field, not as much as other content creator, and definitely not a financial advisor. So please, when I put out my opinion here, take it as my opinion, add it to your overall research, and define if you think I'm right, partially wrong, or wrong. Okay, so please, this is only a debatable opinion, so please let us debate it in the comments below. So let's quickly look at what has happened with the collapse of Terra Luna and the massive amount of Bitcoin and other coins that were in the backing to stabilize that not so stable coin that actually went to zero, which is UST. Also, other players that were heavily invested in this project revealed their weaknesses, and these are in the most part lending platforms or entities that made use of the capital of lending platforms and then made business or leveraged bets with this. And one of these entities is Three Arrows Capital. Three Arrows Capital is a hedge fund that has actually taken loans from other lending platforms and then put out leveraged bets on crypto price developments, and especially leveraged longs on crypto prices of Bitcoin, of altcoins, and other future developments that actually at this point plunged into a bear market and got accelerated into this bear market development because of the collapse of the Terra Luna stablecoin. Now, what is super interesting about this, and I didn't know it until now, is that Financial Times reported that Suzu and I think it's Kyle Davies, they actually made a bet on a theory that were more likely than not occurring. So they were betting on a super cycle that actually would, because of financial institutions coming into crypto, extend the market cycle and would actually make crypto not go into a bear market again. So they actually put not only a bet on this development, but an over leveraged bet with borrowed money. So that is basically the 1 billion times heavier version of the alcoholic dad that goes to a horse race and bets the whole family money plus a credit, a big loan from the bank and the house onto whatever horse that he thinks is strong enough, with a jockey that is strong enough, and basically even borrows money from the mafia, let's say. So it's not even a funny topic, but I just want to give an analogy how crazy this is. Yes, we also thought that this bear market would take longer to really occur and that there would be another leg up maybe. Some of us thought that other people were wise enough to see the bear market knocking at the door and actually sold off a lot of the funds, people with way more experience than many of us had. And some of you in the comments, when I was still bullish, pointed out that you were not bullish and you actually challenged this thought for me. But I would have never, despite a normal bet, have put a leveraged bet or even a loan funded bet on such a development. Now it's crazy because if you consider the case of Three Arrows Capital, they actually did not only lose all their money, but they put the loss in the balance sheets of other projects that are then holding and managing the funds of regular retail investors, of whales, of other people. So, and this is where the cascading effects comes in. Now, what we need to know right now is basically whether our exchanges, where we still have funds on, and I hope you don't have a lot of funds on the exchanges anymore, are or were exposed to those projects where we already know that they are filing for bankruptcy, like Three Arrows Capital is filing for Chapter 15 bankruptcy in the US right now. And just to keep the story complete, Chapter 15 bankruptcy is actually a not US based entity that files for bankruptcy in the US and therefore requesting additional help from US jurisdiction to solve the case because US entities are affected. So this gives you already the first overview that we have here. US based big players affected, otherwise they wouldn't file for this Chapter 15 bankruptcy. Now what we know so far is that because of this, also now Voyager has halted withdrawals, and Voyager is not a small fish in the entity space here. And also we know that, for example, Coinflex has halted withdrawals. There were rumors about KuCoin having problems, which they denied. And there is also the problem with BlockFi and Genesis that were involved with Three Arrows Capital. And if I'm not mistaken, in the case of BlockFi, it's a very big loan of 660 million US dollars, which consists of a part of stablecoin, $350 million or so, and 15,000 Bitcoin that they were actually owing to that project. And therefore that lending platform could collapse, because then they are also getting loans from other platforms. And there you have the reason why I call this the Lehman effect.
The bankruptcy of Lehman Brothers on September 15th, 2008 was the climax of the subprime mortgage crisis. After the financial services firm was notified of a pending credit downgrade due to its heavy positions in subprime mortgages, the Federal Reserve summoned several banks to negotiate financing for its reorganization. These discussions failed, and Lehman filed a Chapter 11 petition that remains the largest bankruptcy filing in US history, involving more than $600 billion in assets. Lehman borrowed significant amounts to fund its investing in the years leading to its bankruptcy in 2008, an intricate process known as leveraging or gearing. A significant portion of this investment was in housing-related assets, making it vulnerable to a downturn in that market. One measure of this risk-taking was its leverage ratio, a measure of the ratio of assets to owners' equity, which increased from approximately 24:1 in 2003 to 31:1 by 2007. Sound familiar? While generating tremendous profits during the boom, this vulnerable position meant that just a 3 to 4% decline in the value of its assets would entirely eliminate its book value of equity. Investment banks, such as Lehman, were not subject to the same regulations applied to depository banks to restrict their risk-taking. The bankruptcy of US investment bank Lehman Brothers on September 15, 2008 accelerated the global financial crisis caused by the US subprime mortgage crisis. The financial turmoil caused serious dysfunction in financial and capital markets. It gave a crushing blow to the world economy, which fell into a global recession. In this situation, major US and European financial institutions suffered from enormous losses related to subprime mortgage loans and related securitized products. I mean, guys, if this does not sound like our current crypto market crisis, I don't know what is more similar. The only difference is that we don't have digital assets, but real estate assets in this particular case.
The reason why I'm telling this to you is that for me, it's a similar situation in the crypto market right now, because one incident revealed a major problem with the lending and crypto lending platforms, because actually with all this crypto lending, there is no mechanism to see or to measure the worthiness of a person to really demand a credit. So you put down a certain amount of crypto and then you can get a credit against the super volatile asset. But after that asset reduces in value like 50, 60, 70, 90, 99%, you still have this open loan, but you cannot sell off these assets anymore because they are also being sold off, and therefore the price collapses so that you cannot fill your obligations anymore. You are margin called, but you can actually not act anymore because what you have put as a backing is also decreasing in value in the spiral, because everyone has to react in the same way. So this revealed itself because of the Terra Luna crash, then became visible because of the Celsius problematic, and then became a problem because of the insolvency of Three Arrows Capital, and now we see it. Coinflex has a problem. Vauld is the newest one that came out today that is halting withdrawals, and whenever your exchange is halting withdrawals, it might be already too late, because then they are closing in all the assets that they have for a potential process where they would then first of all repay the biggest creditors basically, and then after a while, if there are any funds left, they might repay also the normal stakers and users in that sense. So yeah, more likely than not, you will see your funds ever again. Maybe there is a chance. So what we can do right now, and I said in the beginning of the video that we are going to talk about this, is that we can get our assets from the exchanges if they are not stopping withdrawals right now. And yes, this move can contribute to an overall phenomenon of a bank run on most of the exchanges, but you have to think about yourself and your own benefit first. Because if you secure your assets on a cold wallet, people cannot steal it from you anymore, exchanges cannot lock it in anymore, and they are safe no matter what happens. Yes, if this contributes to a bank run problem, that is bad. But if you lose your assets, no one will care for your assets thereafter. So you have to think about yourself first. So, recommendation from my side is, obviously, if you have a good staking reward, you are not worried and you are willing to risk this money, then that's fine. But if you are really thinking that the amount of, for example, Ecomi tokens that you have right now is not secure on Ascendex, is not worth the 2% staking rate, then you might think of unstaking if you haven't yet, and then you also might think of removing those coins, those tokens from this specific exchange, because once they halt the withdrawals, it might be too late. Some of these are only doing it for analysis purposes, and then they are basically coming out with an analysis, everything's fine, we are not exposed too bad to these basically bankrupt entities, but you cannot count on it. And actually you cannot count on it for all exchanges, no matter what they put out right now on Twitter, because even the Celsius one, even the other exchanges, they were claiming until hours before they stopped withdrawals that they are completely fine and there is no problem. They will never tell you before, especially to avoid such a bank run. So the time to act is right now. Don't get fooled by these little green relief rallies in Bitcoin. If you consider all these facts and you consider what we have discussed in the videos before, we have to also see that it is very likely that we see another collapse, another crackdown, if we see more of these entities, of these companies, of these lending platforms, of the hedge funds and of the cryptocurrency exchanges being sucked into this disaster, let's say, and basically falling with the other domino stones in that sequence, and this cascading, this Lehman effect trickling slowly into the other projects. So for example, in the case of Vault, they only said that one of the bigger entities with a big loan is not able to repay them, and therefore they have these claims, these open claims, where basically this other entity defaulted on them. And that in itself is already bad, because if this entity that is so big or has this big loan is not Three Arrows Capital, that also means that there is another big entity out there in trouble which we don't know about yet. And right now at this point it's almost certain that there are other entities out there that can also collapse and could also be in trouble right now. So for me, these are absolute warning signs. I wanted to share them with you. Obviously, some of you might think this guy is only fudding. This guy was bullish a couple of months ago. Yes, I was, but I see things in a different light right now. So I want to share this with you. If you agree or disagree, please let me know in the comments below. Also, let me in the comments below if you know about other news and entities that I have not covered here right now. And with that said, wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon, and see you in the next video.